Hello, welcome to Talking Point. I'm your host, Nitin. The Talking Point today focuses on healthcare predominantly. We'll talk to the management of Laurus Labs in the second segment. The first segment, we're getting somebody who tracks this very closely, amongst other things at DAM Capital, but Nitin tracks healthcare very closely as well. And we get him in on the show to try and understand how he thinks about what's happening in this pocket currently. Nitin, great having you. Thanks for taking the time out. This is Neeraj here. Good morning.
Good morning, Neeraj.
Nitin, what's your sense? I mean, we've had select companies come out thus far. The larger bunch is yet to come. Are we looking at a bit of a transition period for healthcare companies? Because some sects of healthcare and pharma have done very well. Some have not over the last 12 months.
So, Neeraj, I think we're going through a little bit of a golden phase for the sector from an earnings perspective, largely because domestic continues to be okay and exports have come back very strongly, partly because the earning erosion, pricing erosion, which was hurting the businesses in the US has stabilized. And more importantly, there are a lot of big ticket opportunities like Revlimid, which have been to crystallize for a bunch of companies, especially for most of the large cap companies over the last few quarters. And I think this will continue. The Revlimid tailwinds will continue at least for the next 4 to 5 quarters. So at least for the next 4 to 5 quarters, the sector is in a very healthy shape from a reported earnings perspective. I mean, especially the ones which got the US tailwind.
Got it. Sorry, just on that, before we move on to the other aspects, Nitin, typically because the markets tend to discount 3, 6 months, 9 months in advance, you still think that time is some time away. I heard you say 4 or 5 quarters of tailwind still exist.
Yes, I mean, specifically on Revlimid, because this is an unusual opportunity. I mean, we haven't seen an opportunity of this size coming simultaneously for so many players at the same time. And my sense is by Q2 F26, it will be behind us. I mean, it won't be there meaningful beyond that. So I guess another 6 quarters are left for the reported earnings to look good. At some stage during the year, market will start to get worried about the post in Revlimid light for a lot of the companies where the Revlimid tailwinds are there.
Okay, so viewers, that's the US exporters. A clutch of these companies, Dr. Reddy's and the likes, have this Revlimid benefits coming in, and that's to be kept in mind. Nitin, from amongst the pharma companies, US FDA action was very hot in the last 12 months. We've seen a number of companies get observations as well. Maybe 1 or 2 like Lupin have largely remained unscathed. Just trying to understand what's the pecking order at DAM Capital when it comes to at least the US generic exporting companies.
So yeah, from a pure generic exporters, and I keep the specialty companies like Sun Pharma out of it. The strongest businesses on generic exports are, we like Aurobindo is a top pick in the generic export businesses, the most strongest generic franchise. And then we also like companies like Lupin and Zydus, which have got finally, which have got a lot of things sort of falling in place for them in terms of very decent approvals, good quality approvals coming through. And as you mentioned, and a reasonably clean track record on the regulatory side over the last few quarters, which gives them significant clarity on the new product launches also on a going forward basis. So the pecking order would be Aurobindo, Lupin, Zydus as the relatively preferred names among the large caps.
Got it. Okay. Nitin, before I'll come to CDMO at the end because we got the management of Laurus Labs post that. But before I come on CDMO, the other aspects of healthcare, we've seen hospital companies having, how do I say, for lack of a better word, caught between a rock and a hard place in certain times in terms of regulatory moves, but the earnings and the stock price performance hasn't been too bad. What's your sense about how to play this theme?
So you're right. On hospitals, I think structurally, from an earnings perspective, the business is in a very, very good shape. The uncertainty which has come in is because of the potential regulatory activity which can happen in the space. At this point of time, we don't have any clarity on what can happen and in which shape and form it can happen. I mean, if I keep that out, because we don't know what could be the contours of any regulatory action, if assuming it comes through, I think businesses are earnings perspective they are fine. I think our view is that healthcare in India is a structural story because the demand supply gap essentially is in favor of the suppliers. The country is aging, the country is becoming richer, and only as many hospital beds are there, quality hospital beds are out there. So structurally, it's a brilliant story. Earnings will keep coming through in the sector, barring anything which happens on the regulatory side. So if we just keep that aside, and the other part which you mentioned has already happened is multiples have got re-rated meaningfully for the hospital business over the last 12 to 18 months, especially post-COVID. So there are relatively limited upsides possible on the multiple re-rating. But I guess we are looking at compounding stories from here on, unless and until something really dramatic happens on the regulatory front. I mean, that's the way we look at it. No more earning upgrades, no more PE re-rating, but consistent earning stories from here on.
Got it. Nitin, then I come to CDMO, and we've seen a couple of companies come out with numbers. They are not just pure play CDMO companies, Syngene and Laurus, but there is this whole promise that a lot of people are baking it around that CDMO opportunity because it may move from China to some of the other countries. India is well placed, etc. What are your thoughts on that longer term aspect, of course, and then couple that up with how did you view the earnings and the commentary of both Laurus and Syngene, if you cover them?
So, so I'm personally pretty positive on the CDMO space. And I guess this tailwind, which is coming from the Biosecure Act implementation, is going to help the sector. But in general, I guess companies have been working in CDMO. Select companies have been working in CDMO for quite some time. I think we're getting to a point where, and we're seeing news flow across companies, right? It started with Divi's was the flag bearer for the CDMO story in India, and we've seen other companies sort of coming through and having meaningful accretion to their CDMO businesses, franchises coming through, and we're probably seeing. My sense is we'll probably see more and more of it as we go along, right? More companies are getting commercial contracts from innovators, both on small molecule as well as the biologics. And I guess the Chinese and any sort of disruption to China, Chinese sort of partnerships because of the Biosecure Act will be for the tailwind. So the point here is in pharma, incrementally companies need to incremental value barring domestics and generic exports will get created from participating in the innovation value chain. Either companies do innovation on their own, like somebody like a Sun Pharma, or some people who are doing innovation their own NC proprietary research, or the other way out is you partner with innovators who are doing the proprietary R&D. And I guess we see a lot of opportunities incrementally building up in this space as we go along.
Okay. Do you have coverage on the ones that have come out with results thus far? There is Syngene, not necessarily just CDMO, but came out with numbers and their guidance. Laurus yesterday came out with numbers and guidance. Do you have individual coverage on any of these?
So we cover Laurus and Syngene. We track it as part of Biocon. I think these are very different business models. Syngene still is a CRO heavy business, while Laurus is predominantly a CMO. I mean, there are some challenges which have been there in the last few quarters, around lack of funding or reduced funding for biotech, which has impacted the CRO part of the business, across the landscape. But CMO continues to be in good shape, and I guess that's reflected in the way Syngene numbers got reported. Even Laurus, they were relatively late starter in the business, and they have a long way to go from here on. And they are, from whatever the guidance management has put out, whatever commentary is there, it seems a pretty promising road ahead for Laurus on the CDMO front.
Okay, and valuations. Just last question, Nitin here. Valuations, do they worry you, or do you reckon earnings growth could take care of it? What's the call out there on both Syngene and Laurus in particular?
I mean, my sense is there's just a lot of expectation around earning pickup coming through. The opportunity space is very large. Earnings can really grow meaningfully to the extent management can deliver on the promise which is there in these businesses. So as you said, earnings multiples are high, but the expectation is earnings should take care of them as we go along with the next 2 to 3 years.
Got it. Nitin, this was lovely. I look forward to a longer conversation at some point of time in the next couple of months, maybe post the earnings season is over. But thank you for taking the time out and speaking to us today on this particular aspect.
Thank you so much, Nitin. Pleasure talking to you.
The pleasure is ours. Viewers, we need to take into a quick break. Nitin Agarwal spoke about how earnings growth could take care of the steep valuations in Laurus. We speak to Dr. Satyanarayan Chava, as is the norm that we do every quarter, on the other side of this break. Stay tuned.